Welcome to The Real McCoy Show, where we bring on top industry leaders and discuss what makes them the real McCoy. Now, your host, Steven McCoy.
Hello and welcome to today's episode of The Real McCoy Show, where Steven McCoy interviews top entrepreneurs in the local marketplace to find out what makes them the real McCoy in their industry. And today we have a special guest, Brian Phillips with Supreme Lending, who's an industry leader and been in the business for how many years?
Almost 20.
20 years. Wow. So a lot of information he has, a lot of information that he can help local buyers get the right loan program, whether they want to refinance or if they're looking to buy a home. So our pride is to find out what is the real McCoy, what makes you the real McCoy in your business.
Well, a couple of things. Number one, I feel like we've done a really good job of being in the know of what's going on in today's market. I think our president and our CFO of the company has really given us the right ideas of what's actually happening, which we can deliver to you guys as realtors, right, to make you better than your competition. So awesome. I feel like, truthfully, that's my value prop.
Fantastic. So one thing I wanted to ask you, or I have a couple bullet points I wanted to cover, and ultimately there's a lot of information out there regarding COVID and all this stuff, but today we already talked prior to going live today. We're not going to doom and gloom. We're here to bring the light at the end of the tunnel as we start to come out of the shelters in place. And not only being a real McCoy in your industry, but also we wanted to find out what are maybe 3 tips that a consumer can do on their own to actually boost their credit score. Because I'm a real estate agent, I'm not a lender, and as I've been told before, I need to stay in my lane, Steven, right? So as a licensed and a team leader at Supreme Lending, what are maybe 3 tips that a consumer can do to benefit their credit score on their own?
So when we pull credit, we have the opportunity to go into their actual credit and do a high-level understanding of what the actual credit looks like.
Right.
We can either pay down debts, we can show them and coach them to I think the biggest misconception in today's world right now is people that have a collection and they get a paid collection off of their credit does not boost their credit score.
Wow.
It doesn't, because it's like you and I go into our job. It's our job to do that, right? Yeah. Well, when it comes to a deletion of a credit of some sort, we need to go in and go, okay, if we delete it from the bureau, then it's never been seen. And so we're coaching people all the time now to go and call these different creditors saying, hey, if you agree to pay X for this debt,
right,
your score will go from this to this, and that can change your rate from 1/4 to 3/8. But more importantly, like with PMI or private mortgage insurance,
wow,
it could really increase their added benefits. So
awesome.
That's one thing. Second thing is we have, obviously credit people that we work with that if we have to go down that path, we can do that. But for the most part, really the 2 things we're going to do is we're going to coach the client on go through the credit and see what's the next tier we can get them to, and if it's going to cost too much money, we're not going to do it.
Yeah, that makes sense. And then what about a rapid rescore? Is that something that should be done? When should that be done? And have maybe a success story on a rapid rescore that's really saved someone a lot of money? And does it cost to do a rapid rescore once the credit has been, let's say, let me back up and reframe that, because, so often consumers are maybe advised to pay off a credit card, which you just said is not the right thing to do. So I've been told before that maybe pay it down to 30% or 20% of the allowed debt. So if my limit's only $1,000 and I need to be at $300 as a revolving debt versus paying it off actually hurts the credit because it's no longer showing ability to repay, if you will. So not only reestablishing their credit, but how does that rescore impact and how much money could that save?
Good question. So when it comes to credit as a whole. We need to have a healthy mix of credit. So what you're saying as far as paying off debt, and that doesn't help the client. If we have some small little piece on the balance, that helps quite a bit.
Right.
When it comes to a rescore, that's on us. We're the ones responsible for that payment. What we're basically going to do is going to say, hey, Steven, if you pay this debt down to X, you give me a copy of the balance, you give me a copy of the account, everything, send it back to me, then I send that to the bureau. At the bureau level, they go and rescore the credit, and it takes about a week and a half, something like that, rather than waiting on the credit bureaus to update, which takes 30, 45 days.
Right, because you're not the only client. Is that a surprise? Yeah. Right.
Sometimes.
I've been told by title companies that, the lender, they call and say, hey, we got to clear to close and docs are going out. So I take up my position and say, okay, well, let me call the client, let me call the title company and say, hey guys, we're clear to close, docs are on the way, right? And so often that, I've been doing this 15 years and we've sold hundreds of homes. So I've worked with all calibers of lenders from, a lender that I would never call again to a lender who, like you, who I reciprocate business back and forth with, because we trust you. And when you say things are done, they're done, right? So maybe touch on the fact that when you have a clear to close and docs are going out, maybe to the consumer level, that doesn't mean, hey, go to the title company, you're ready to sign, because that puts added pressure on the title companies, right?
Correct. I think it's more than ever, like you talked about in the beginning, stay in your lane. I think it's way more important for us to now.
I like the whole freeway. Come on. I like the whole place. I like to drive all over the place. Yeah.
But title company, real estate agent, and me need to be in the know right now.
Okay.
When we get a clear to close, we still have to verify and validate with everything that's going on with COVID, and we have to verify and validate the client actually has a job.
Is that important? Yeah.
Yeah. And it's happening more than ever right now, where we have so many people that we close loans on that don't have a job. They don't tell us that. Right. We get it from the HR company or whatever. And so we've always had to validate at closing verification of employment.
Yeah.
No one's known that, though, because it's always been the know that they're not going to be furloughed or laid off, right?
Yeah.
Different market right now. I mean, we're having to deal with things that are different, that you have 2001, 2008 combined right now. Yeah. And so we're trying to put ourselves in the know to make sure that we are protecting not only you, I mean, we're in charge of your money. Right. So we want to make sure get that money to you as fast as we can. But at the same time, we want to keep the doors open and make sure that the loan is actually going to go through.
That's important. And ultimately, Brian just touched on a key point, and the fact is, a lot of people want to get into real estate because they think that they're going to go out and show houses, and it's a great opportunity to help people, which it is, and out showing homes, and it's all bubbly and it's HGTV, and you show a buyer 3 homes and they're going to choose one home, and it's going to be so simple. Therefore, there's a high rate of people getting their real estate license, and they soon find out that there's a lot of behind the scenes. So leading up to today's episode, I mentioned we were going to give some insider tips from Brian's perspective as far as on the credit score. So he's touched on that. So I wanted to say behind the scenes, he just touched on the fact that there's another verification of employment that's always been done, but it's now more relevant because of people being furloughed. And he mentioned people are losing their jobs just after or maybe right at closing, and they're not coming forward with that information. So that kind of segues into my next question. What about forbearance? I mean, there's so much news about it, and whether it's something that's rolled to the back of the current borrower's loan, if it's rolled to the back and maybe that's just added at closing the next time they sell their home, that may be a benefit in my book. However, if they're going to be hit with an additional 3 months of payments right after, let's say August 1st, that mortgage companies say no more forbearance, so now you have a payment of 3 payments that are due, or now you're in default, which is going to cause this huge tidal wave of defaults, which it's out there looming, right? But can you touch on forbearance and if that's a good idea? I know obviously paying your payments on time is always the best situation, but if a person doesn't have a job, if they've been laid off and they're trying to work through this time, should they for going to forbearance for maybe all of their assets, or should they beg, borrow, and rake up additional money to keep on time?
Great question. And it's a hot topic right now.
Right.
So when it comes to forbearance, it's the same as a student loan. You have deferment and you have forbearance. Forbearance is just one shy of a collection. Okay.
Wow.
So when it comes to our creditors right now,
Right.
if we have people that are furloughed, that are in forbearance, that means that they are unemployed and they can't make their payment. We can't lend on that. So if they decide they want to refinance their house or do something like that, or they want to buy a new house,
Yeah.
all lenders are different right now when it comes to this space.
Wow.
But I think for the most part, all have been in agreement with what Fannie and Freddie are saying is, the CARE Act is something out there that there's no limit to, you can qualify, like I could qualify right now.
Right.
There's no litigation to that. So
Yeah.
as far as the actual qualification to do a forbearance, it's really hurting the economy more than helping right now
Yeah.
on the lending space, because us as lenders, we're responsible potentially for that payment
Wow.
until they get back on board, especially as a servicer.
Yeah.
So a lot of people, I've talked to a lot of people that are trying to go into forbearance, and I'm saying, you know what, let's potentially refinance the house, save a couple months, because you skip a couple months to
45
refi,
days or
right?
60 days, right?
Helps out a little bit. They go back on their job and all is good. Rates are low right now.
Yeah.
So forbearance is a bad word for me right now
Yeah.
because of what's happening. We had 21 million people today lose their job. That was the non-farm payroll and jobless rate report that came out today.
Wow.
It's a lot of people.
Yeah.
It's a lot of people are going to do forbearance. There's a lot of, it's billions of dollars that are going to affect the overall economic space with us. So,
And that's important. As far as like on the street view, like, I'm out in the field, I was out showing homes yesterday, showing property and stuff. And, one thing is to see it on big news and other media outlets, but can you drill maybe another layer deeper and say, how is that going to affect my neighborhood where I live in Salina, your neighborhood where you live in McKinney? And what is that going to do? Are we looking at a tidal wave like we had in 2008 of a drop? Or is this more for a certain demographic that's maybe in an apartment that's not paying the rent? Or is this truly like all levels, from $1 million property to, there's really no $100,000 property anymore.
right, yeah.
But someone who's, has a $250,000, home, and their payment is, $1,800 a month. So is it wide scale, or is this more in a certain price point?
No, I think it's across the board. I
Wow.
think that's, if you economically go from East Coast to West Coast of what's going on with furlough and,
Right.
it's a pandemic, truthfully,
Right.
but it's not doom and gloom. And we can't think like that, but we have to educate people. If you decide to do this type of product, you're going to hurt yourself financially long term. We don't know the definition, truthfully, of what's going to show on their credit report,
Yeah.
but it's like a modification. So if you think about a modification basically puts that money on the back side of the loan, and then we
Right.
pay it off once it's closed.
Yeah.
But it still shows on credit as a negative.
Wow.
So everyone's showing a forbearance on their credit report right now.
Yeah.
That's going to hurt them to be able to purchase in the future.
Right. Or maybe not only hurt them, but maybe they have to pay a higher interest rate because their score has been impacted, right?
Well, it's basically you saying to me, I can't afford to pay you.
Yeah.
And so,
So just wait.
yeah, but then you want to buy
Yeah.
another house, or you want to refi
Right.
or whatever.
Right.
Why would I lend you money?
Yeah.
Doesn't
Makes
make any sense.
Don't direct that at me. I'm not applying today. No.
Got
So I did want to ask. So not only about that, but let's. I've been talking to a lot of people that are on the fence about selling their home, and I've been advising people and look, I'm in my own space. I go out. I have to create every day. No one. Every day I tell my wife, she's a licensed agent, and shout out to my beautiful wife, my daughter
I can't see
Alexa
her, but-
and Lienchka, and hope you guys are giving us a thumbs up on this. But so I tell her every day, look, every day we open up the garage and we're leaving to go to the office, I don't see a line of people outside knocking on our door saying, please represent me buying or selling your property. So we have to go out and get it. We have to create it, right? So with that being said, I'm advising my sellers, look, if you want to sell your home right now and you want to get the absolute most amount for your home, then you should do it right away, because in the fourth quarter, we're going to start to see those, the funny money, the gift funds, or maybe the furloughed employees will no longer get paid. Now the forbearances are being stopped. So let's fast forward to September, October. So they don't have money to pay. Now the mortgage company is saying, if you don't pay, you're going into default. That takes a 6-month process to foreclose. So let me just present it this way. If you're going to sell your home, you want to sell right now, because the values are as high as they're going to be. It's only going to go down. But if you want to buy a house, then you probably want to pump the brakes a little bit, sit on the sidelines if you're in an apartment or something, renting a home for 6 months to a year, and see what comes out of this. I mean, we don't see the values, what all the metrics have been showing. The values aren't going to drop 20%, right? Yeah. It's not going to be a fire sale. But if you want a 3, 6, maybe 9% discount, and you don't have to buy a home today, then you probably want to get on the sidelines. But if you want to sell, man, sell your home, because it's going to drop. The writing's all on the wall.
You can't get your cake and eat it too right now.
Right.
And pricing, I agree with you 100%. I think pricing right now is very, very solid across the board, because we haven't seen any defaults. I mean, we haven't seen anything that happened back in 2008 where there was an actual mass economic housing crash, right? We could potentially, we don't know that. I mean, we're 60 days from now, we'll know that. But if people want to go and buy houses now, now's the time to get them off the fence, because the rates are so ridiculously low.
True.
And who knows? I mean, we have multiple investors that what makes me the real McCoy, in my opinion, like UVP wise.
Yeah.
I have my own underwriting team, closing team. Everybody works directly with my group.
Right.
Okay. Right. Everything is done directly through Fannie, Freddie, HUD, Eagle. Like we do everything direct.
Yeah.
Well, when it comes to what's going on right now, I need to be in the know as far as, if we're having challenges with our warehouse banks and all that stuff.
True.
We've positioned ourselves to be able to handle that without a challenge. As a sub-servicer. But a lot of companies, let me just kind of give you the label of 4 different lenders out there right now.
I was going to ask you, what's the difference between going with the broker, and sorry to interrupt you, what's the difference in going with the broker, a local mortgage broker, versus a big bank? And, I've always said, and correct me if I'm wrong, but Chase and Wells Fargo and those type big box, lenders, they have one product, they can only offer their preliminary bank, which is Wells or one of the big banks. Not only that, but the person who's taken the application is actually an hourly worker, not a commissioned salesperson. So whether you close in 30 days, 60 days, 90 days, they get a paycheck every month, or every week.
Right.
So I'm not salary, so mine's more like every month, 30 days out. But so as a mortgage broker, and you were going to say the 4 differences, and I meant to ask you that question, but you jumped the gun. You were already getting there.
Sorry. So there's 4 different companies out there right now, truthfully. You have the one company right now that just can't sustain what's going on. Yeah. They're having to pay for the forbearance. They're having to pay, the warehouse line. They're having to pay margin calls. I don't want to get into all of that stuff. Okay. There are companies that are going to be shutting the doors. And it's still going to happen just like it did in 2008. There will be those companies. You have the second company out there right now that says, okay, when we sell a loan, typically we get X amount percentage as an SRP, or a service release premium. Yeah. It's costing more money for us to originate a loan right now than to sit on that loan. Wow. So if you don't have the big, deep warehouse bank lines, you're probably not going to make it. And so a lot of companies right now are just sitting tight and going, you know what, we're not going to originate a loan right now until this all pandemic thing goes away and everybody goes back to work. Okay. The third lender is us. We're going to hit it right on I'm a golfer. Yeah. So this is how I can only relate to this.
Okay. Cool.
I'm going to hit it right down the fairway. Yeah. And I'm going to bomb it and hit it perfect, but I'm not going to hit it in the rough right now. So we've moved out of a space of a lot of the Ginnie Mae products, the FHAs, the low credit scores, the stuff that furlough people are
Right.
currently in,
Right.
a lot of them are costing billions of dollars to companies right now. So we're not going to go into that space.
Yeah.
Same with jumbo and all the non-conforming stuff. The fourth lender is going to be the one that just says, you know what, business as usual, everything's fine and good. They'll get smacked in the head probably in 60 days.
Yeah.
The difference between me, I'm a direct lender, which means that everything is done directly through me. I'm a correspondent lender. A broker, and I'm not talking bad about a broker. I have a lot of great friends that are brokers, but they have to ship files to different investors. And if that investor pulls out, then that loan is done.
Right.
Okay?
No one to buy it.
Exactly. On our side, we have different avenues to be able to, maneuver the loan to make sure the client still goes to closing.
Yeah.
But what we're dealing with right now, truthfully, is we've had multiple clients that have closed, that got furloughed, and we are not the type of people going, well, if Fannie will allow us to keep it on our warehouse lines and do what we need to do to protect the family,
Right.
we're going to do it. Same with the jumbo product. I mean, there's a lot of jumbo loans that are out there right now that now we can't service. We're servicing them. So you've got to have a really deep warehouse bank.
Yeah. That's awesome, man.
What's going on?
Supreme Lending is based out of, Addison, right?
Mm-hmm.
And then your branch is right here in McKinney.
McKinney,
Or right
yep.
here in McKinney. So, it's a lot of different options when it comes to getting a loan, and so many times, maybe not so much anymore, but I can't tell you, on a weekly basis, I get a pre-approval from, an online bank, Quicken Loans, or, nothing wrong with Quicken. I'm just saying that I want a person who I can call one person, a direct contact, and not have to go through calling an 800 number. I have one right now that's under contract, and I have an 800 number I have to call to get a hold of the rep. She does not provide me a direct phone number. This is a pre-qualified buyer that was a referral to me, so I'm not going to ask them to change loans. I'm going to just simply work through the process like I always do,
Sure.
and be creative. But, I have an 800 number, like a 7-digit PIN number that I have to put in to reach this person. If they don't call, they only work 8 to 5. So if I don't reach them between 8 and 5, and that's actually Pacific time, so adding more and more roadblocks. Yeah. So I can't tell you as a listing agent, representing my seller, how many times that I would present 3-4 offers to them. A couple of years ago, you put a house on the market and you would have 4 offers in 1 hour, and you would have a comparison shopping method, which is, okay, this lender, 800 number, they're Pacific time, you have a local broker, and then you have another person over here that's maybe doing some creative financing. Maybe it's 5% down, and then they have a gift fund from all these different bond programs that are out there. And then you have you guys where it's like in-house broker, underwriters in-house, processors in-house, the closer is in-house, so you simply walk across the hall and check on the file, versus crisscrossing across the U.S. to a call center to get updates. So, I appreciate, all that you guys do. I know Supreme is an awesome brand, and you've taken it a step further with your team, the elite team. And, us at Remax, I partner with a huge brokerage, a big brand, because I've always felt that if I'm selling one of my largest assets, that I want a brand, right? I don't want to go with, Mickey Mouse 123 brokerage that doesn't even have a concrete brick and mortar store, nor do they have a broker who you can call. My broker is in the office every day. Well, prior to COVID, we'll cut Chris some slack, but Chris Harden's an awesome broker, and I guarantee you, if I text him or call him right now, he'll call me right back. So I'm looking for, I always want to align myself with team players who will take the call. And Chris Harden, I know my calls that I call out to you, they're not always talking about the weather, right? I'm calling you about some storm brewing, it's maybe weather in a different way. I'm like, oh man, this is what's going on. He's like, tell it to me, right? Let's just get through it.
Yeah.
But it's important to have a brand to back you up, and I love aligning with top people like yourself. So hopefully you guys got some value out of today's show. And
let me add to something real quick, because
Cool.
I really feel it's very important. And Wayne, if you're watching, my coach, it's something that we coach our team on all the time, is changing the UVP. unique value proposition.
Right.
Used to, when I would call you as a listing agent, I would tell you that the client's pre-approved, we've gone through income, credit, everything,
Right.
all is good,
Right.
blah, blah, blah. It's a different game now, where now me calling you as listing agent going, hey, my team can work from home.
Yeah.
I'm good.
Oh,
We're not
that's right.
moving.
Yeah.
And
Sure.
the client has a job that can be remote. We've verified and validated all that stuff. Like, those are the things that need to change the mindset.
True.
Because our fiduciary responsibility is to the buyer's agent and the buyer. We obviously want to work with the listing agent to educate them, but
get
ultimately, as selfish as it can sound, I only want to communicate to the listing agent to get their business.
True.
Right?
Yeah. That's
So
what
if
it's
I'm
all
giving
about. Yeah.
if I'm giving you a heads up
Yeah.
as a listing agent,
Right.
and the buyer's agent already knows what's going on because
Yeah.
they're familiar with the process, then we should be in good shape.
And that's right. You touched on remote appointments and working remotely, and your team is safe, and they're working from their certain locations, and some are coming back in the office. I mentioned to you the other day about our open house strategy, and 2 weeks ago I had a open over in Plano, and one of the people who showed up, I said, how did you hear about us? Was it all the crazy signage? Because Brian, we put out 85 signs. We're not a Pop-Tart agent that puts out 3 signs and just sits back and hopes that someone shows up. We're all in. We have a whole thing about open houses. I'm not going to cover that. I just want to touch on and say what we're doing during this time is basically we're only providing open houses on properties that are vacant. And at a vacant property, we have all the doors open, excluding the front door. If it'll stay open, I'll have it open. But all the lights are on. We will provide masks and gloves for any of those who want them, right? And we provide one family through at a time, versus before it'd be like, hey, come on in, meet with us, walk the property. So we're using, social distancing by only allowing one party at a time through the open house. And then once they do go through, they're wearing proper PPE, okay? And then after they leave, we go through and just hit it with a few hits of Lysol. And my wife's like, why you smell like Lysol? It's got spraying this open house down, right?
COVID-19,
you're coming
baby.
in and smell like an ornament Christmas tree over here. So it's like fresh, okay? So, but ultimately, we're practicing that in our open houses. As far as listing appointments, it's, man, I can't tell you how awkward it is to do FaceTime with someone you never met, and you're doing a FaceTime tour through their home, and normally at a listing appointment you have that common bond of people to people interaction. Well, try that with a cell phone and tell someone, you know what, those curtains are a little overbearing. So you know what, your furniture is a little too crowded in here. So we pride ourselves on all these strategies in our book, how to sell your home fast and for top dollar. Putting those into practice remotely is completely different.
Sure.
So we've embraced that challenge. We're doing it through FaceTime. So FaceTime listing appointments, buyer appointments, we're setting them up basically very similar to that open house. We're turning on everything. I'm not walking you through, because you know what the bedroom is, right? I don't need to say, Brian, this is the bedroom. Check out the kitchen. Well, it's pretty obvious, my friend. It's got a cooktop and a
stove,
sink. That's probably
yeah.
the kitchen. You don't need me to tour you through. So we're practicing social distancing while showing property as well, by opening the home up and saying, go in, take a look around. As they come back out, we cover all the questions that they may have. We take it a step further. Prior to that appointment, we ask them the questions and say, anyone in your party feeling any symptoms, right? Have you read through the seller's disclosure? Have you watched the virtual tour if the agent has it? Which on our listings, we're offering virtual tours and also virtual walkthroughs. If someone calls us from a sign call and they want to see that home, I'm not just going to show up, right? I've never been the agent to just show up and show someone a home anyway. We want to get you pre-approved, be sure this is the right home for you. And then from there, now I'll say, look, Brian, are you comfortable doing a FaceTime walkthrough to see if this home is even a good fit? We go in, I walk through, and it backs up the power lines. You say, Steven, I'm out. Well, guess what? Now, Brian, we've eliminated another party from going to that potential client's home. And it's safety first, right? Even walking into today's building, I hit a few locked doors. I'm like, man, how do you get in this place?
It took me 30 minutes to get in here.
So we're social distancing today. Our producer, Derek, shout out to Derek over there in running the mics, and I know I'm a handful. This is our first live episode, and
I think we did.
Me and Brian are on a redemption tour here.
I think we're so you got so many cookies out there. I coach the team all the time. You got cookies, you got brownies.
Right.
There's so many cookies as agents, so many cookies as loan officers, but how can we be different and be a brownie? And exactly what you're talking about, as far as doing the virtual tours and stuff like that, and having people actually come in and not being afraid to show the house, but doing it smart.
Right.
You're ahead of your competition. So good work.
Man. That's why we're the real McCoys. Yeah. All right, Brian. Well, thank you so much for being on our show today, and look forward to having you back again. And let's go crush it and help some buyers and sellers make their dreams happen.
Sounds
like
good,
a plan?
brother.
Let's do it. Awesome. Peace out.
Bye.
Thanks for watching today's episode. Check out the links in the description to get more detail on our guest today and all things North Texas real estate.